Welcome to the Janics channel again and to the financial modeling course. If you haven't subscribed to our channel, please subscribe to our channel for more upcoming videos. Today we are going to discuss about the future value again, but with a bit complex problem. And the problem I have wrote here, let's read it. For example, you intend to open a saving account. Okay, your initial deposits of $1,000 this year will be followed by a similar deposit. Similar deposit means the same $1,000 at the beginning of year 1, 2, 3, and 9. So the total will be of 10 years. If the account earns 10% per year, how much will you have in your account at the start of the year 10? So it's a bit tricky problem because you are not going to find the future value of only this 1000, this single 1000, but every year you are going to pay or to deposit $1,000 in your account. So you have to keep in mind that there are 10 payments, okay, and 10 payments will earn different compounded interest. That's why the problem is a bit complex. It is not the same like we have discussed in our previous videos. So here I have calculated it, but just to demonstrate you how you are going to calculate it, you can just write. But I think you don't need to write here. You just come here, this one, to the function box, and you can write FV. Okay, you see, you find the FV, the future value function here. Now you are required to click OK and see this table. In this table there are certain information that you have to provide in order to find the future value of this cash flow stream. So the rate means the interest rate, so you just write here and it will be okay. Here the number of periods, I can just click here, but here you see 10 is having y's, which maybe create a problem for us, so I'm going to write it manually, the 10 years, okay, or the 10 periods. And here we have to write the PMT or the installment. But here I want you to keep remember only one thing, and that is you have to write minus before writing the PMT. Okay, so you just wrote the minus, and now here you have to write 1 or 0, and you can see it here. If the payments are going to be paid or at the end of the period, you have to write 1, and if the payments are going to be made at the start of the period, then you have to write 0. So I'm going to write 1 here. Okay, now you just click OK. You see the balance at the start of the 10 year will be $17,531.17. So it was a bit tricky problem, and if you want to see the formula, I can just write or show you the formula. Formula text, yes, double click it and click on here and here. You see, this is the formula. You can just see it, you can verify it, and if you want to calculate on your own, just follow these rules, or you can just come here and find the FE value and plug in all the required data, and you will have this amount, okay, the future value of your account balance. I think it helps, and if you understood it, if you like it, kindly subscribe to our channel for the upcoming videos. See you in next video. Thank you guys.